Hey everyone, real quick here, Brian Neff with Stop Being Sold, and today we're going to cover the FDIC's electronic deposit insurance calculator that they have here on their website, and it's going to estimate how much coverage you have in your accounts. Below the video, I will include a link to this so you can go back and do this, but let me walk you through the steps. This is very important right now, and my phone is literally ringing off the hook. Asking questions. If I got a CD, if I got an IRA in the bank, or if I got money market or savings or checking, what if I'm over the limits? How do I know my bank is safe? All these questions. And today we're going to cover, this is how you're going to figure out from the FDIC how much your accounts are covered for, and you'll know it, and you'll be able to print a report at the end of this. So let's get started. So down here on this page here, again, the link's going to be below the video here. You're going to enter your information. Now I can put any bank in there, any bank's name. And first of all, it'll tell you if it is an FDIC-insured bank. That's the key right there. If you click on this little "What's this" tab, it will show you that, is the bank you're banking at today an FDIC-insured bank? If it isn't, this insurance coverage is not going to apply to you. So that's where you start at first. But let's just take a big bank that I have right now, and let's just go with Chase. And you're going to click on each one of these, and you're going to add what type of account you have: a personal account, government account, business account, whatever it may be. Let's start with personal type. So in my personal account today, and this is just a single account for me. And let's say my name is John. We'll use good old John and Mary. And so there's John's savings. Okay. And let's say my account balance is $150,000 in savings. And it always asks this question over here: is the owner living? Yes or no? So yes. I'm going to add it to the report. There you go. Now it's now added to the point. It shows what the balance is. And now I'm going to add a second one. Let's go back to another personal account, and I'm going to put single, and I'm going to put Mary, the owner. Yes, she's living. Mary's savings. And let's put her the exact same amount, 150,000. Add to the report. Now we see 300,000. Add another account. It's this simple, folks. I'm going to say that John and Mary both own this account. Okay, sorry. Owner has to be John and Mary. Thank you for correcting me. There you go. So now you know how to put a joint owner. Yes, they're both living. AM joint, John and Mary joint account. And let's put $100,000 into that account. Add to report. And these are just general balances, folks. I'm just trying to show you here whether you have less or more than this. You're on this page if you've got more than the FDIC and you're asking what your limits are. So add new account. Let's go to a personal account, and let's go with an IRA. Owner John, living, John, IRA, and John has $75,000 in his IRA account. Add to report. Add one more. Let's give Mary an IRA also. Mary, IRA. And give her $75,000 also. And yes, she's living. Okay, so here's what we've added to the account so far. John's got $150,000 in his savings. Mary's got $150,000 in her savings. They have a joint account, $100,000 in that account. And John's got a down here, John's got an IRA, 75,000. So Mary's got an IRA, 75,000. You see how they broke them out in a joint account? They split up the amounts. So now we've got 550,000 total amount of coverage. I'm going to add one more account here. That's let's see if they have a CD in here also. Let's see if there's an other. Okay, let's do a CD. John is the owner. Let's make a CD for both. John CD, and let's say he's got 25,000 in the CD. Add to report. Oh, wait a second. They're not going to allow you to do this one. Okay, so let's change this. Let's go to a trust. John and Mary own a trust. This is the one I really wanted to cover in greater detail. Now, John and Mary trust account. Okay. Now, let's list beneficiaries. This is very important that you know this. We've had questions about it. What if I had a trust? We're going to cover what the FDIC limits are on the trust also in this big report. So let's list the two kids. John Jr. is a person and is living. One beneficiary. Let's list the two kids. Let's put Rachel. John Jr. and Rachel. Person. Beneficiary living. Yes. Now, what if you want your grandkids to have access to some of these funds? Let's put Michael. Person. Yes. Denise. Person. Yes. Okay, so we got two children, two grandchildren. I'm going to add a couple more in here. Robert. Person living, and Bellany. There you go. Person living. There you go. And in this trust account is $1.5 million in assets. Add to report. Okay, let's review this real quick. First of all, we're using the bank Chase. We're using John's got a savings account for $150. Mary's got a savings account for $150. They have a joint account together for $100,000, and this FDIC calculator splits it up 50-50. Retirement accounts. John's got an IRA for $75,000. Mary's got one for $75,000. John and Mary together have a family trust for $1.5 million. And in there is $750,000 in, let's see, $750,000 in coverage for the John. Oh yeah, they split between John and Mary. So John's got half of the trust. Mary's got half the trust. Okay. Now, let's go down. Next step, total of $2 million and $2,050,000 total coverage. Okay. Let's see how much is actually insured by FDIC. Let's click calculate coverage. Do all of them have equal? Yes. All the beneficiaries have an equal interest in the trust. It is calculating. Okay. Okay. Here's the results. Looks good. According to the information you've entered, EDIE estimates that your deposit accounts at this financial institution appear to be fully insured. It's important to be familiar with the coverages. Now let's take a look and why it did it. John savings under $250,000 covered. Mary's savings under $250,000 insured. These are different accounts, so both accounts are insured. The joint account, $100,000, 50-50. Guess what? Between the $50,000 here and the $50,000 here, they're still under, and the $150 at the single accounts up above, they're still under the $250,000 limit. It's covered. Retirement accounts. These are different accounts. So it's 250,000 per account per individual. Well, IRAs are different. 75,000 for both. Both are still insured, folks. This is huge. Now, let's go to the trust because it's so big. $150,000 on the account. 75,000 for John's side, 750,000 for Mary's side. The insured amount is 750. Why? Because there are 6 beneficiaries. 6 beneficiaries for $250,000 each is $1.5 million. The trust is not based on who set up the trust. The trust is $250,000 insured per individual. That's the beneficiaries. So 6 beneficiaries, $250,000 each, $1.5 million is fully covered. So their $2 million portfolio, $2,050,000 portfolio is completely covered. And you can click print this report. Here's the report. Single accounts, John, Mary, joint account, covered, insured. See all this, everything that's listed insured. It's got all the beneficiaries are insured. Folks, this is huge. This is what this calculator can do for you. Get in there and play with it. Start with your bank first, then start listing your assets. If you find that your assets are over that limit for that bank, that tells you that and it will tell you if you've went over them limits, it will tell you that you need to go to another bank with some of them assets if you want to be fully insured. Hope this video is helpful to you today. Make sure you hit that like button if you like this content, and if you like this type of instructional videos, let us know. And we'll do more of these for you folks. But stay tuned. We may even do one on the credit union ones here shortly. Thanks, folks. Have a great day.